a house was 17 grand then is now 396,000. Did the house get that much more expensive, or did the dollar fall by that much in terms of its purchasing power? And that's where we're going. That's where we're ultimately heading. How else do you pay off this massive mountain of debt that we have? That's why the wealthy own assets, whether it be real estate, whether it be art, whether it be precious metals, or whatever it is. You own assets, not the depreciating currency around you. That's the way to get ahead, period. And that's the whole premise of the Cantillon effect, where the people closest to the money spigot, like the 14 magic computers that Elon Musk found printing money out of nowhere. Well, the people who would have received that and spent it buying assets benefit disproportionately to everyone else as that money trickles down through the system in the form of inflation that came out of nowhere, because it's not being counted in the official numbers, yet it's showing up in rising prices. And so, this is an environment where keeping your money in dollars is a recipe for disaster in terms of your purchasing power, your standard of living. Whatever you do, whatever asset you choose, it's better than leaving it in dollars. The head of the BRICS New Development Bank said we agreed in principle to a new settlement currency called the unit, and then BRICS then the BIS pulls out and cancels the whole project after it was operational, saying that they can't be involved with Russia because they're being sanctioned by the West, as if they just realized that Russia was the R in BRICS after it was fully operational. It really pissed them off. But it is still gathering, members. Indonesia just became a full member. They have the largest in-ground deposit of nickel in the world, and strategic in terms of their shipping and natural resources. So yes, it is. You're just going to find far less information about it. And they're still massively accumulating commodities, and the Belt Road is still growing, and all of the things that we've talked about are happening. They're just far less transparent now, because they understand that this is an administration that is going to care very much more so than the previous did, and B, the West, which BIS is a Western institution, can't be trusted. And I understand that from their standpoint. So yes, it is still a thing without question. The most knowledgeable investors in the world, the central banks, their buying hasn't stopped. The United States has become a net importer of gold and silver for the first time I can ever remember. We're seeing the largest deliveries in the history of the COMEX market ever. First one in the February contract. I'm not sure if March beat it, but 5,900,000 ounces delivered. You see, who's got that money? You see JP Morgan on behalf of a client delivering $4 billion in gold to the COMEX. Who's got that money? Which client would that be? You're seeing the LBMA be bled dry and go from T+1 to T+8, which is basically 8 weeks, that is, which is basically a default. And they say it's a shortage of trucks and manpower. You're seeing massive inflows, about 80 plus million ounces of silver delivered into COMEX, the largest ever here in the March contract. And silver, 45% of the LBMA float delivered over the last 100 days or so. I mean, things are getting ridiculous. And then you see PSLV, which yesterday morning, or when the market opened up, we saw 1,314,107 shares traded in 1 minute. There used to be days that you wouldn't see that many shares traded, and they were all dumped onto the market, shorting the market. And the reason that they shorted PSLV is that PSLV was starting to, have so much attention. They were going to have to go into the open market and buy a whole bunch of silver. And Rick Rule is a friend of mine. I remember an interview where he did talking about this, saying the last time they had this massive buildup where they had to go into the market, they couldn't find enough silver. They had to go everywhere. And it took a whole long period of time. And they were buying from the US, from London, from Switzerland, anywhere they could find it. And it took a long time to fill it. So now they in the same situation. And instead of shorting physical silver, they come in and they short this. And so they'll borrow shares, which I'll talk about in a moment, and they'll take them and immediately sell them so that you have this inequity. So it overwhelms the amount of new volume. You have all of this short position, and when added cumulatively, they don't then have to go into the market to buy huge amounts of 1,000-ounce bars that are massively rehypothecated and are sold at a 2,000% rehypothecation or more, and they're not available, which is an existential threat to these banks who are wickedly short. It's a way for them to keep Sprott from going into the open market as per the prospectus and buying more bars. And, thinking about the word rehypothecation, like the shares that are borrowed, it is a closed-end fund. It's not really an ETF, so you could borrow shares of it. That's SEC Rule 15C3-3. In the United States, the Securities and Exchange Commission, the SEC, regulates rehypothecation through Rule 15C3-3, which limits the amount of a client's securities that a broker-dealer can rehypothecate to 140% of the client's debit balance. So they can take all of those shares and rehypothecate it, sell it over 140%. Really? That's interesting. I wonder how they come up with that number. But then they take those shares and immediately sell them to the market, and in 1 minute dump 1.3 million shares of PSLV, which helps suppress the price, of course, but keeps them from going into the open market, because the prospectus says if you have all of this demand above the amount of silver in the market or in the trust, you got to go buy more. When added against the short position, well, now you don't need to do it. The ability to short this fund is just absolutely asinine, but these are the games that they're playing. I also think it's interesting. I came across a tweet. It's of Donald Trump on January 7th, 2017. He says, silver is the most undervalued asset on the planet. It's been money for all of human history, and yet here it sits at $16.50 an ounce. Sad. Well, two things. It's doubled since 2017, so it hasn't performed that horribly in terms of percentage gain, but he understands silver and gold. Do you think that has anything to do with the influx that we're seeing flowing into COMEX? Could he be behind it? Maybe. So all sorts of reasons in my mind to still look at gold and silver in a vastly different way than I ever have, and never more importantly, to look at it as money and as wealth, not as an investment. You'll do damn well if things go where I think they will, but you own it to get out of the way of whatever it is that's coming down the pike right now, even without any interest being paid to it. That's the point that that needs to be addressed as well. And you have a president that's hell-bent on trying to lower rates. I did an interview today with a gentleman who thinks interest rates will fall to 2.5% within a year. I have a hard time believing that.
That's fast.
But, hey, and what does that mean to the value of the treasury? What does that mean to the value of the dollar? What does that mean to, all of these things? There's differing opinions. I found it interesting. Did you see Max Kaiser's text the other night? He was just talking about stablecoins. Stablecoins in many respects are supporting the treasury market. The net since 2014, there's been no new treasury issuance to central banks. They're not buying any. They're net. Yeah, there are some buying, but more selling than buying. And so the stablecoin market, like Tether or USDC, is primarily invested in treasuries, which every time a new stablecoin is purchased, every one of these transactions, it supports the treasury market, buys treasuries. So he's saying a stablecoin backed by gold would outcompete a USD-backed stablecoin on world markets. Russia, China, Iran should take note. It would track inflation. The US dollar does not. You're guaranteed to lose purchasing power. That's what we're talking about. The USD has no volatility, but again, you are guaranteed to lose purchasing power. Bitcoin is deflationary but volatile. Gold tracks inflation and is minimally volatile. Why wouldn't Russia, China, Saudis, Iran do this? But they are doing this. That's the point. And this is from a Bitcoin maximist who understands that what gold is wealth. What Bitcoin is a way to increase your wealth dramatically if you're on the right side of it. And he's proof of that. Some people have, but maybe he's wise enough to understand that, you take that profit and you put it into wealth, which is very minimally volatile and tracks inflation and retains your purchasing power. And that's really the lesson to be learned from this. It's not about becoming wealthy. It's holding wealth that maintains your standard of living more than anything else. Now, silver, you could argue, is kind of supercharging that theory, but nonetheless, I've never told anyone to buy metals to become rich. You may, but that's not the reason to do it. You know, think of AI and what it's going to do to the human element in just about every single, even to the point of human labor, when you get, robotics, which are getting better and better and better. Employees are a pain in the ass, right? And they cost money, and this is what's happening. It's a scary thought. My youngest kid is, going to college now, and it's the last of the three. And never had these thoughts with the other two when trying to figure out a path. But, going into many of these fields, if you don't have a strong understanding of at least of the AI, vocabulary and the ability to access it and use it and maximize it, you're way, way, way down the totem pole in terms of employability. And that's changed. That's scary. I mean, everything is changing. There's another reason to own assets right now, because it will become a realization that I think that over time, that employment is going to become very difficult. Mm-hmm. And you'll see a widening between people who have wealth and those who have none. Get assets, get regimented, pay yourself first, start accumulating. Doesn't matter how small it is. Get out of debt. Do the things that you can do to prepare for things that are rapidly changing. And I think AI is at the forefront of it. To ignore it is a big mistake.